Continuing our coverage here in Davos, and joining me now on the program for our annual catch-up is Rishad Premji. Rishad, many thanks for joining us here on CNBC-TV18. It's great to have you back. Let me start by asking you about what you're hearing here, not just from your clients, but from other leaders that you've met. My sense is that while there's been a lot of talk about recession and growth slowing down significantly, I'm not picking that up in the conversations here. The pessimism that was expected, I don't seem to see that too much. Is that your sense as well?
Feeling good to be here again. Good to see you in our annual catch-up. We met in May. It's less.
Yes,
it was less cold. It's freezing, and you insist on doing this outside, which is always interesting.
We have no choice.
So, you know, it's very interesting. I find there's still uncertainty in the environment, but there's more cautious optimism, and I'm using the word more purposefully and intentionally. So that's one big change. The other thing I find is the environment, to your point, is less somber than I expected. People are more hopeful of how things will come back. People are more hopeful about the recession in the US perhaps, or the slowdown in the US being more short-lived. People are a little bit more uncertain about Europe. But I also find it's very contextual to companies, and the companies within those countries and within those specific industries having very different journeys. So when I talk to stakeholders here, some people are having a good run in Europe. Some people are struggling in the US, which is counterintuitive to the way the macro environment looks for both these countries. But generally more cautious optimism and a less sober feeling than perhaps one felt before coming here.
Okay, let me talk to you about what's happening back home within the company. You've just announced your numbers, record deals, 4.3 billion, but it didn't seem to reflect in your growth numbers. Why is that the case?
Yeah. I think it's two things. One is it's very encouraging that deals are transacting, and deals are transacting on scale. A couple of changes in the nature of deals. One, I think deal making is a little bit more cautious, so people are taking a little bit more time to make decisions, but yet deals are transacting, which I think is incredibly positive. The other big change is the focus of where deals are moving to, which I think is more cost-based, more cost-transformative, which I think is incredibly powerful. I think, so the good news is there's deals transacting, and hopefully that should show up into business over the next several quarters.
But do you see any significant moderation at this point in time, or indications of there being a significant moderation?
A couple of things. So one is, you know, we had, I think, more furloughs than we anticipated back in December. Some of that perhaps will continue as you move into December. So there's a slow pickup back in January than you would have normally had in a less uncertain year. But the good news is deals are transacting, and customers are still making strong, relevant decisions for their future. I think there's also a stronger orientation to ROI, so investments that customers have made over the last 2 years, perhaps in a certain state of euphoria, the customers are now demanding and saying, look, how do I make sure that I get returns for that investment? So there's a huge focus on optimization of spend, which also suits partners like us very well, because our role is a value orchestrator, is to bring together the stuff that you have in the old legacy organization and the new stuff you're buying, and how to make sense of it all to actually drive business outcomes. So I'm, as I said, quite positive as we look out over the coming few years for the tech services industry and for our own journey as a company.
Speaking of your own journey, I think the last conversation that you and I had, you did talk about some of the changes that you had made internally, as well as some of the levers that you were hoping to exercise to be able to build momentum on growth and to catch up with what is happening with your peers. But that hasn't happened yet. How much longer do you think you will need to be able to get to that?
Well, Shereen,
to where
if you
your
look at
peers
financially 21-22, I think we had a fabulous year. If you look at this year, we're having a decent year. Yes, we're not growing as fast as competition, but I think we're having a decent year. If you look at our order booking over the first 9 months, it's up 20% plus compared to last year. So all the lead indicators, I think, are powerful. I think we have the right leadership team, which is settling in well. I think attrition levels are coming down dramatically, which is helping. So I'm quite optimistic and excited as I look at our pipeline, I look at our own structure, I look at our own settling organization, I look at the momentum we have seen over the last 24 to 30 months. I'm optimistic, and I'm not usually as a person an optimist. I'm much more of a pragmatic person. But I'm excited, and I'm excited for us and for the future of the organization over the next coming few years.
So consolidation as far as strategy is concerned, you said things are settling down, even as far as the new leadership is concerned, so don't expect any big changes?
No, you know, as a part of large organizations, there's always be some changes. That's the nature of good organizations, I think, that there are always changes that are relevant. But I think we have a strong, well-settled team that is very much focused on the market and transacting and seeing stuff happen in the market.
You know, you talked about attrition coming down, and that has been the case as far as your peers are concerned as well. But what about hiring, especially given the fact that there is some degree of uncertainty, even though you are cautiously optimistic, but you continue to be uncertain about the environment?
Yeah, look, when attrition comes down, your hiring by design slows a little bit. Attrition has come down quite dramatically, right? We're at 17.5% on a quarterly annualized number, which is dramatically less, 360 basis points less than last quarter. I think it'll temper even further as we move into Q4 and beyond. And so I think
why do you think that's the case? I mean, is it because the environment has changed, or on account of the wage hikes that you've taken?
No, I think it's a combination of different factors. I think it's a combination of what we are doing internally as an organization, but the reality is also that the environment has slowed. The euphoria and the craziness of financial year 21-22 is just not transacting in this year as well. And I think that bodes well for the model. It also bodes well for stability, and I think that's a good thing for organizations.
You said deliberate hiring, which means what exactly in terms of numbers?
No, I meant that simply that hiring slows down when attrition slows down as well, right? So we will continue to hire as we need. We've now hired more in 3 months, in the first 9 months of this year, in terms of freshers than we hired the entire of last year. So we continue to build our base. We continue to sort of re-strengthen our pyramid to bring down overall costs, which again attrition helps you with, because you don't have the frenzy of lateral hiring, you don't have the frenzy of, you know, at some point outrageous salary increases as people jump ship from one job to the other. And that just bodes good for the model and for the industry, I think, overall as well.
So where are you at in the journey as far as the future of work is concerned, between bringing back people to office, which is the thing with a lot of companies at this point in time, or still giving some degree of flexibility in a hybrid mode?
So we have about 30% of our people between customer locations and our locations that are now coming in 3 days a week. I have a couple of design principles that I think are important on this. One is the future of work is hybrid. So there'll be some sort of a model in which people work from home partly and work from the office partly. Two is you've got to think through, how do you access talent? Do you get the talent to come to the big cities where you are, or do you access talent and go there? So does that have implications in terms of some people working from home on a permanent basis because you want to be more inclusive? Does that have implications in terms of many centers but smaller centers? And that's something we've got to think through. Do we go to talent, or does talent come to where we are? And the third thing is relationships matter. You know, relationships matter. I think one of the advantages where it worked so well during COVID is because people knew each other. And as organizations have grown, as attrition has picked up, we have lots and lots of new people in the organization. And so context and relationships matter in the future of work. And so we'll have to think through some model where all of our people can come back some of the time. And so we're working towards that. It's a slow but steady journey. And we'll see how we progress. The other learning also, Shereen, is that you can't be too fixated on a point of view. You've got to have the openness to say, hey, look, this is working, and now this is not working anymore. But the future of work, we believe, is a combination of these 3-4 factors, and we'll see how it unfolds.
Well, you know, speaking about the future of work as well as the need for bringing in different kinds of capabilities to react to the new changes that we're seeing, and you followed the M&A route for that. Is that likely to be something that will be a focus in 2023 as well? Yeah,
so for us, M&A, Shereen, has always been strategic. It has never been volume increasing, it's been value enhancing, right? It's been focused on very, very specific things, either new age capabilities, moving up the value chain, or moving into new markets. And we'll continue to be thoughtful, purposeful, focused about that on a very, very strategic basis as a part of our strategy. So it's not, we don't carry targets, you know, we don't say at the beginning of the year, we'll drive X% of growth from M&A. But certainly as a tool in our arsenal to continue to accelerate, to continue to differentiate, we will use that.
So what are the other tools at this point in time that you feel most confident about to be able to continue to differentiate and create a moat around you?
No, so I think moving up the value chain and moving into the whole think and design space, driving a strong consultative story, I think is incredibly, incredibly important. And we're seeing the traction with Capco, which was our largest acquisition in the history of the company in the financial services space, which was very consultative-led. Two things. One, we've seen great traction in that business on a standalone basis, but we've seen great traction in synergy deals, in the kind of conversations, in the mindset shift that we're able to drive with customers and how they see that end-to-end story across thinking, designing, building and running, and it's transacting and coming together well. So we'll continue to look at elements like that that can help us drive differentiation and build differentiation. The other thing that I think we will focus on strongly is on upskilling and reskilling, right? that's a core component. Our asset is people, and how do you ensure that people stay relevant in new age capabilities and are able to constantly upgrade themselves as old skills become less relevant.
So at this point in time, as you look at your dashboard, what are you most excited about in terms of opportunities, in terms of markets, in terms of verticals?
Yeah. So, Europe is doing well for us. It's been an area we've invested very purposefully over the last few years. If I look at our pipeline in Europe, I'm very excited about that. There are pockets
That's interesting, because Rajesh said that that's the one pocket that they're most concerned about.
So as I was saying, it's very interesting. The dynamic is different for different organizations based on the way their portfolio is unfolding. Our pipeline is healthy. If I look at the large deals in the pipeline, they seem healthy. Hopefully they will transact over the next few quarters. So, the model is quite simple. The model is you book deals, you translate those deals into revenue, and you continue to sort of move up the growth chain. So I'm optimistic, as I said.
Okay, well, we wish you the very best of luck, Rishad. Thanks very much for joining us here on CNBC-TV18, and we let you go because I know it's getting colder as we speak, but we are going to take a break. There's a lot more conversation coming up here on CNBC-TV18 at Davos 2023. Come back to us. We're back in a minute.